Hello, and welcome to February Office Hours. My name is Tanya. I'm a CPA of over 20 years, and I've helped people save hundreds and thousands of dollars over the years. And I've given them the peace of mind that they know that they're doing things the right way and the IRS is not going to come after them. If you're watching in the community, welcome. I'm glad you're here. If you're watching on YouTube and you want to learn how to pay less taxes and keep more of your hard earned money, consider joining. I'll have the link in the description. And that's what we're going to talk about today, how you can save thousands of dollars on your taxes. And I've got an agenda for you. So we're going to share my screen and jump right into it. Here we go. So today's agenda, we've got some new members, so I'll be welcoming them. We're going to answer the member questions. One of them is from Halsey, tax planning. What if you have a W 2 job, but you also have a side hustle where you get 1099? How can you figure out how much taxes get taken out from your W 2 paycheck? Or if you're paying enough, if you're not going to get a huge, crazy tax bill at the end with your side hustle. There's two simple calculations I can show you for that. The second one, Catherine, she had a question about the write-off template and how she can apply it to her specific business. We'll go over that specific business and I'll give you an example of how this will save you exactly $5,674 in taxes. Then Kimberly, home office deduction. So what if you have a home office? What if you and your spouse are living at home and you have two offices? How do you split the costs of those offices? And what if you have one office and you both share it? So I'll go over those examples and then we'll go into the March calendar events so you know what's coming up. All right, so first, let's welcome some new members. We've got Melissa, Crystal, Saeed, Francesca, Aman, Elizabeth, Gina, Kristen, Jessica, Adriana, Melissa, Zara, Connie, Jeff, Alptakeen, Bruce, Margaret, Kimberly, Warrens, Tabitha, Nisha, Myra, Catherine, Sella, Debbie, and Diane. Welcome. Thank you for joining. I'm glad you're here. So excited to grow this community and get feedback from you guys and dive into all the little nuances that each person might have and figure out how you can pay less taxes and keep more money and do it the right way. All right, so let's dive into the first question. We've got Halsey with tax planning. Now, I'm going to go here and show you this little spreadsheet that I'll link also for you guys. I made a video about this and the link is here. But basically, when you have a W 2 job and then a 1099 job, the answer here is you've got to do some tax planning. And because you have to figure out how much are you making from your W 2 job, what's your total income there combined, and what is going to be your net profit from your side hustle. So you got to figure out how much are you making, what are your expenses going to be, and estimate that. I know it might be hard to estimate if it goes up and down, but you can take, if you've been doing this, if you did this last year in 2024, we're doing 2025 taxes right now. What you can do is look at your 2024 tax return and get an idea of how much taxes you're paying and then reverse engineer it. So let me explain. Here I've got two simple calculations that you can do. The first calculation is looking at your paycheck stub, the last year, the last paycheck stub of the year. We're going to get two numbers here. And I've got an example here. We're going to go to your paycheck stub. We're going to go to your year to date. You look at the year to date gross pay. Let's put that in. That's 68 and 16. 68, 16. We'll put that number in there. Then we look at the year to date federal income tax right here, federal income tax number. That's 10,504. We'll put 10,504. Those two numbers will give you a percentage. What this is saying is that there's 15% of all your income is going towards your federal income taxes. Okay, we've got that first calculation. Calculation number two. Let's go back to your old 2024 tax return. Let's go to look at these numbers. We'll go to total income, line 9. What is this number that you got? What is this number on your 2024 tax return? You're going to plug that number right here. Let's say after all is said and done, I don't know, let's say it was 60,000. And remember, this is including deducting all your business expenses. This is not your W-2 income plus your 1099s. This is your W-2 income plus your 1099s minus all your expenses. Then we're going to go to this other line, line 24, total tax. What's your total tax there? Let's say it was 9,000. All right. This gives us another percentage. We're going to compare these two percentages. If this percentage is higher, that's good news. You don't need to worry about it. They're taking enough taxes out of your paycheck to cover your side hustles and your income and everything. You're going to get a refund actually. Now, if this number is lower, let's say this was 11,000. If this number's lower, you're going to owe taxes because that means they're not taking out enough from your paycheck and you need to change your withholdings or send in some payments to the IRS, do estimated tax payments because they didn't take out enough and you're going to owe. So these are the two simple calculations. Now, let's say this only works if your income is about the same. This only works if your income is about the same from one year to the next. If it's not the same, then you go here and you're going to use a calculator, like a tax calculator from the website. And here's an example of one. And I've got links here to different types. This Tax Act one is pretty straightforward. You're actually going to put in your 2025 numbers and see what comes up, what type of tax numbers come up, and you'll replace those numbers and you'll plug those numbers here. And this will give you another example of like, are you taking out enough? Are you not taking out enough? What you also can do is look at your W-2 because this box 1 wages and this box 2 federal income tax, if you divide, it's the same number. You divide this into that. You divide your federal income taxes into your income. So looking at your W-2, box 1, box 2 can give you the same numbers. Actually, I can even make a note here that it could be, last paycheck stub of the year or 2025 W-2. Let's do this. Box 1 and box 2. You know? And I know that if you're trying to do that for this year, let's say, okay, 2025 is over. What do I do now? What do I do in 2026? You're going to have to just stay on top of it. For example, we have the month of January is over. Let's look at your January, like your their last paycheck in January. It might be depending on when you get paid, it might be January 31st. That is your last paycheck or whatever your last paycheck is for January. or even your most current one. It's February 12th. Look at your most current paycheck, which I could put here. Uh, I could put here, or let's go, or most current paycheck. Okay. What is that percentage? How much taxes are being taken out? If you look at that percentage and then you look at your 2025, 2024, or 2025 tax return, after all is said and done, are they taken out enough? If they're not, you need to go in and change your withholdings. And this is for both spouses. This is if you both have W-2 jobs. Is your paycheck taken out enough? And is your spouse's paycheck taken out enough? You both need to have the same percentage of taxes being taken out. If you don't, then you're going to owe money. You're going to owe taxes. That's just how it is. So basically the question here is, or the answer here is, you got to do some tax planning. You just got to plug in the numbers and do and plan some stuff out. And I've given you these two little simple calculations to kind of gauge an estimate, uh, just to get a better understanding. Use a tax calculator. Look at your paycheck stub. If you need to change your withholdings, go into HR and have them, bump it up. I know they changed the withholding forms. I want to say it's Form W-4. They changed the withholding forms, which is really confusing. They make you do this like whole entire worksheet, and but what you can just do to make it easy, just put extra withholdings. So let's say you find out that, you know, I need to have more taxes being taken out from my paycheck. Okay, so I need to have 18% taken out instead of 15. Okay. Um what would that number be? Let's go this times 18. That's 12,000. 12,000. How many paychecks are going to get in 2026? Let's say you're going to get 26 paychecks. Well, that means $470 in federal income tax needs to be coming out of each paycheck. So then just do the math and look at your paycheck stub, and if you have $300 being taken out of each paycheck, then just put in here extra withholding. You want an extra $170 being taken out of each paycheck, and just put that here, you know, for per pay period, per paycheck. That's the easy way to do it so that you don't have to worry about doing this whole worksheet, and it's just annoying. So that's the shortcut way. Let me know if you have any questions about that. I'm going to delete this because this is a template that people can download. And I'll link this also for you guys. All right. Let's go back to the agenda. We have answered this. Now let's go into the write-off template. All right. This is the 2025 write-off template that I have in my community right here in the classroom. I've got 2025 so that you can finish your 2025 tax return, and I've got 2026 so that you can do monthly tracking and stay on top of it each month. If you don't have a tax software, if you're not using QuickBooks or any like accounting, bookkeeping software, you can find it in the community for free right now. Or you can find it on my Stand store, and I'm running a little special here for tax season, and it's only $7 if you don't want to join the community. So there's some options for you. But this is the spreadsheet that if you fill it out and you find all the write-offs that you're allowed to take, this could save you $5,674 or more. In this example that I'm gonna show you, I've got a little example here of somebody making $50,000 for their sole proprietor business. And on $50,000, if you have no write-offs, you don't write anything off, you're gonna pay $9,776 in taxes. This is just federal. I'm not even looking at the state because the state is like totally different. For example, in California, it would be $950 with no write-offs. So let's knock this down a few $1,000s. How about that? So Catherine's question was, you know, I see the write-off template, but I have a specific type of business. What if what would I how do I use this if I'm a Door Dasher, an Instacart driver, and I do this for that type of business? How do I apply my business to this write-off template? Well, what I have to say to her is this is for all types of businesses. Whatever type of business you have, you can use this template. All these deductions are write-offs for your business, whatever business you have. So, whatever you can think of, you can plug it into this template. And I'll give you an example. So, 21 tax write-offs for delivery drivers. They talk about if you drive for work, your car, right? Uh, well, first, actually, let's go into the supplies. They talk about you could write off supplies that you have to pay that you buy for, like a hot bag or like a cooler to keep things cool. Well, these are considered supplies. And they even have here Schedule C box 22. So Schedule C box 22 or line 22 is supplies. Well, I have this here on my write off template and I've got supplies, you know, work supplies that you need for your work. These types of things that you need to buy are supplies for yourself. Now, they might be specific supplies for your type of business and your type of work, but they count. Um, if you drive for work, parking, tolls, these are all write-offs. Now, this is where it can kind of be confusing for people because this says you can write off the purchase and depreciate it and your registration and your insurance and your car maintenance. But you can't do all that. You have to choose one or the other. If you do the mileage method, you can't write any of those other things off because the mileage rate of 70 cents includes the depreciation and it includes all the repairs and maintenance. So it's not like you can take your miles and also your insurance and your repairs and your gas. No. The only thing you can take that's extra on top of 70 cents per mile is your DMV fees, your car property tax. You can do that. Your interest. If you have a car and you have a loan on the car, the interest expense portion you can deduct. It doesn't have to be a new car. It can be an old car. You can always deduct your interest expense if you have a loan. And then parking fees and tolls. You can write off 100% of your parking fees and tolls. 100% write off. If you were out working, uh, write off. And you pay for this 100%. So this is what you can do for the mileage. Just plug in the numbers and everything gets calculated for you. Because if you put here the miles that you drove for business, let's say it was 8,000 miles, you drove a lot. You drove 58% of the time for your car. Well, 58% of your DMV fees, and 58% of your car interest will be a write off. Let's say you had some parking. Well, that's 100%. It's all calculated for you. So you just need to plug in these plug in numbers here. So this would be your write off for your car. And all you have to do is find these two numbers or three numbers. Now, if you want to do this other method, you have to add up your car insurance. Um, let's say it's that. You got to do your gasoline. Yes, you can do your interest expense here. And it could be linked if it needs to be. Uh, if you pay for your garage rent, if you lease your car, you can do your lease payments here instead of interest expense. If you don't, if financed and you own, if you bought, if finance, let's just keep finance. Let's just keep it there. This is if you own your car. If you bought it and you own it. This is if you lease it. You can write off the lease payments, oil changes, other repairs and maintenance. Let's say you had to buy tires for your car. Oh, sorry. Here's a line for tires. Let's I don't know, something else went wrong and you had to pay money. You got your car washed like once a month. I don't know. You spend a lot of money. Anyways, you take the total of all your actual expenses, you multiply it by the business use percentage of your car, which you got here from figuring out how much miles you drove, and you compare the two numbers. So, what number is bigger? Well, guess what? The mileage number is bigger. So, forget about your actual expenses, forget about any of this. Depreciation, you need to get this from your tax software. And you can, if you do the bonus depreciation, you only get it for that 1 year. The next year, this depreciation number is gonna be way less. Um, so let's say, I don't know, let's say it's 2000. Okay, it got a little bit bigger, but that means you would take your actual. That means you would take your, if you plug it in, if you have an expensive car and you depreciate it and you plug in your numbers and it says, I drove a lot. This is what my mileage deduction would be. This is what my actual expenses would be. I'm going to choose the actual expenses. And guess what? Now you have to stick with it. You have to stick with this method each year. So once this goes away, once you depreciate your car and you have no more depreciation, you would have this be your bigger deduction, but you can't take this because you're stuck with this until you get a new car. So that's how this works. So sometimes this can be confusing when it says, oh, you can take all this. Well, it's one or the other. Business meals. Meals I have here for if you're traveling for business, traveling outside of your tax home. A lot this 100% limit, it's mostly if you have employees or customers that you throw events for and you buy food for that event, you can write it off 100%. Um, also, if you have let's see. Oh, it didn't say it here. But if you have snacks, like let's say you buy snacks for your car for your customers to enjoy, um, those are like 100% write off. They're not deducted. They're not this type of meal where it's only limited to 50%. It's kind of like your office because your car is kind of like your office in a way. So you can write off snacks, drinks, bottled water if you have it for your people to enjoy, you know? Which leads me to the office expense deduction, which is not related to the home office deduction. This leads me to the home office deduction. And This home office deduction, again, it's generic. Anybody who's got a home in their office can use this spreadsheet and take advantage of it. So, whatever type of business you have, you obviously have to have, you know, a little office space in your home and you can deduct it. Let's go into how to so that was the example of the of this template that you can use for any type of business that you have. And I'm going to delete the card numbers here because this is the template and I want people to use it and have it be zeros. Okay, so the example that I had, let's say, okay, you didn't have any write-offs. Well, let's say you used this, you scoured all your transactions and you got all your write-offs organized. You would enter it into the tax software. I'm using a specific type of tax software called Intuit Pro Connect. It's mostly for tax pros who have a license and an enrolled agent. But let's say you're whatever tax software you're using, you've got all these same inputs. Um, and I did a shortcut here where I already wrote off 25,128. I already had all the write-offs in here already to save time. I'm not gonna go in here and enter each specific write-off. That will take a long time. So here I have all the write-offs. Oh gosh, let me go back. Let me delete this. Ah, yeah. Let's go back to the schedule C where all the write-offs are listed. So here's the example. I'll make it bigger. So we've got some car. You paid, some subcontractors. You bought a laptop and you depreciated it. Bonus depreciation, 100% write off. You have some insurance for your business. All these random other little, you travel. Here's some other stuff. Maybe you bought some books, magazines to learn more about. Maybe you did some continuing education. You took credit cards, so you have merchant fees. You have software that you use, telephone and internet, website costs. This is like a different type of example. It's not a driver. It's not an Uber driver example. Um, you have a home office. Well, now you've basically knocked down half of your income. So now only 24,872 is going to be your income. Well, what would your taxes be on that amount of income? You would owe $4,102 in taxes. And so here is the difference. No write-offs, you're paying that, you're paying 20%. 20% of each dollar you make, 20% of your entire income is going to go just to federal taxes. With the write-offs, only 8% of all your income is going to go to federal taxes. That's a savings of $5,674. You're saving like 12%. That's pretty good. Um, I mean, you know, I know it still kind of sucks to have to pay money, but you made 50,000. What do you know? 8% is good. Um, 8%, And in this example, let's say you didn't pay this, let's say you didn't send in your estimated tax payments because you just didn't know and you weren't sure what you were going to end up with. Um, and you had to pay this all at once. I mean, it kind of sucks. And also you'd be hit with penalties. $172 of penalties because you didn't pay this ahead of time and you're paying it all at once. So you want to make sure you do your tax planning. Go in those tax calculators. Figure out what's going to be happening. get a good idea and picture of your taxes so that you don't get hit with any penalties and you pay your estimated taxes every 4 or every quarter. Send in a little payment because you know you're gonna have to owe. It sucks. We don't like it, but let's at least pay the least amount of taxes that you should so that you can keep more of your money. That this is you keeping five, almost $6,000 of money in your pocket that's not going to taxes. That's good. Um, all right. We've answered that question. And part of this template, we've got the home office deduction, which is right here, home office. So if you have one home, that's super easy. You put in, I have a home and I use it's 150 square feet. I have a whole room for this. So it's 15%. Um, that's easy. You put in, okay, what was you maybe you paid rent? You put in your total amount of rent here. And I'm going to go into the tax software and show you what the form actually looks like. Here we go. You paid some insurance, homeowners insurance, your renter's insurance, and maybe you have like a security camera. Okay. You're going to get a $4,537 deduction for your home office because 15% of all your actual expenses are being taken as the deduction. This is if you have one home. What if you have two people using the same office? We're going to go into you have one office, one person. That's easy. One office in the same home for two people. Well, you don't want to double dip because you're going to have two Schedule Cs. You're going to have two properties, even though you have one office because it's for two people. Because this is connected to one Schedule C. See here, 4537. 4537. This one home is resulting in a $4,537 deduction. If two people use it, then you got to split these up in half so that one person gets a deduction of 2,268 and the other person gets a deduction of 2,268. So combined, you're at 4,537. So for your specific Schedule C business, one spouse, you're going to divide this into two. You're going to take your total insurance divided to two. You're going to take your total rent divided to two. And any other. You divide it by two. So now you guys are splitting the expenses. And your other spouse would report these numbers also so that they would get the same expense. That's pretty straightforward. You just split these up. Okay. Now, you have what if you have two offices in the same home for two people? One person has an office that's 15%, and another person has an office that's all the same size, 15%. You're basically going to use this same form for each of you. You don't split up the costs. You take the entire amount for your rent and you report it for your home office, you would get a 4,537 deduction, and your spouse or the other person that's living in the house that has a separate office would also get a 4,537 deduction. So in total, you would get $9,000 of a deduction because you've got 15% of the home for an office and the other person has a 15% home for the office. So you technically you're using your home, 30% of your home is being used for office space. That's that's that can happen. And if that's the case, you do not split this up and you take the entire amount for each of you. And you calculate your own little office percentage for you. So that's how that works. You basically treat it as if it's one office for one person, and you each calculate it for yourselves. All right. Hope that answers your question, Kimberly. Let me know if you have any questions. And if anybody else has any other questions, we can uh, answer them here in the community. I'll also be putting up a new post so that you can put your questions here for the next office hours, which will happen March 5th. I want to be able to support you as you go through this tax season. Taxes are due April 15. The business taxes are due on the March 15. That's why I kind of moved it up to make it a little earlier in case you have an LLC, an S corp, a C corp. You got to do your taxes by March 15, or you can file an extension. That's okay. Still have to pay your taxes by the due dates, but you can file an extension and then it won't be due March 15, it'll be due September 15 for businesses. Um, I've got also some bookkeeping sessions where you can join in and work with me so we can get our numbers organized. So these are the events for March. February, we've got a bookkeeping session next week. And yeah, join the community if you haven't. Post your questions. This will be fun. I'm excited to. I'm gonna stop sharing. I'm excited. I need to make some muffins soon here. I'm excited to support you in this journey. If you do your own taxes, if you do your own bookkeeping, I think it's great because you're getting a grasp of your numbers. You're understanding your business. When you know your numbers, you know your business. And eventually, when you are able to hire a bookkeeper, I have a bookkeeper that I work with that is super great. I refer her clients and hire a tax person, a CPA that can do your taxes. But at least you have a grasp of your numbers. At least you know that you did it yourself. You know how it works. You know when the bookkeeper gives you the report, when the tax person gives you your tax return, you can review it and you know what's going on and you can ask the right questions and some people might make mistakes. You can be like, "Hey, I noticed this is off. What like did you take this into consideration?" You're still, you're in charge. It's your business, it's your numbers. Um so you gotta know it. You gotta be in it. And that's how you're gonna pay the least amount of taxes possible and keep more of your hard-earned money. All right, that's it for today. Office hours for February. I'll see you in the next one. If you need help on, you know, proving your write-offs, uh, I have a video on that on my YouTube channel. You can watch that next. And I'll catch you on the next one. Happy tax time. Bye.